This video is sponsored by Gate.io. If you set an account up using the link in the description, you'll get 25% back on all your spot and futures fees for life. Gate.io. Good morning, everybody. Let's have a look at markets then, shall we? We're starting off with the euro, where we see a perfect bounce. A perfect bounce, even though it's not followed through particularly well, but a perfect bounce. From your 200 simple and exponential. So this is the target that we were looking for, really, to see if there's going to be any form of reversal. You can also look at this as in form of some kind of falling wedge, which again has a bullish outlook. You know, you're more likely to break out of this than not. And so if that's the case, we wicked down into the support, like a major support, back into it, and now we're getting rejected from the top of the wedge. So maybe we do continue with a little bit of downside, but I would expect maybe over the next, well, what day are we today? Thursday? Maybe this week into next week, we do see a breakout from here to the up. Now look, just because it's statistically more likely to break out than break down doesn't mean that's the only scenario, but it is more likely to break out than break down. And the reason I'm forecasting maybe next week is if we can just extend our the time frame of this 200 simple and exponential until it gets into the channel itself and down into the falling wedge there, then we're looking at about 6 more days really. So yeah, next week probably sees a major support enter this channel, and basically that could be the one that causes us to break out as again we get smaller and smaller and steeper towards basically an apex somewhere along the line in September. Right, so that is looking okay so far for the euro. So what next? What should we have a look at next? Probably, well, let's have a look at Dixie then, shall we? Where are you today? So the Dixie, yeah, so again, just as you'd expect, doing the inverse move of the euro, but still in a bullish position. So we've broken out of a descending triangle here with a pump signal kicker. So I'd still think that the Dixie actually wants to run, but if the euro can move up at the same time as the Dixie, it'll make this harder for it to blast all the way out to sort of significant highs. But it's still bullish, so I think we'll still trend up for the Dixie, and at the same time might even trend up for the euro. That might sound crazy, but if we look at the weakness of the yen, for instance, you can see how that sort of thing's possible. This used to be a carbon copy of the Dixie, basically. This is effectively like an accentuated Dixie chart, and it peaked at the exact moment of the Dixie peaking, and it gave a very, very overheated money flow index read, which is why I thought that the Dixie was probably finished. But this doesn't look like it's finished to me. This looks like it wants to continue up for a little longer. So that's how the Dixie can move up slowly while the euro also moves up, because the Dixie is not just euro. Euro is hugely dominant, but it also has to incorporate all these other smaller currencies, but still they have an impact. Right, let's get ourselves to S&P. We'll do US 500. Looking okay, but peaking, I suppose. So I've moved all the way up to the Bollinger Band Center on a daily. So this would be a natural area to see a rejection or a pullback. We'll decide shortly if this is going to have continuation, maybe onto like a new local high. It could, yeah, it could. I know Michael Berry's put shorts on the S&P, which is fine. Yeah, it's fine to do that. And I suppose if there were to be a short placed anywhere at all, it would be from this candle body today, at this Bollinger Band Center. Now, if we're looking at momentum, 1, 2, 3 drives of hidden bullish divergence. We're still below the 0 point on the MACD. It's not massively sort of broken bullish or anything like that, but it would break bullish with daily closures above 44.73. So optimistic, but currently this is a rejection area, so I suppose shorts in the immediate term with a tight stop loss in case we break out from that. Right, what else are we looking at? Okay, so yeah, there's nothing more to see here. We are trending down towards the not quite formed golden cross on the daily for oil. So back down to the center of this previous range, 73 to 83. We're in the middle of that now. Your guess is as good as mine at this point. Looking at the daily, I wouldn't say that is a strong enough area to expect a bounce from. Maybe this lower zone towards 76.50 could be the place. 4 hourly losing all major supports, and so oil does look like it wants to come down a little bit. Thank God for that, because we were getting pretty scared as we were crossing that 83 zone. And finally, gold is seeing a bit of a move up now. Excellent. So the 4-hour looks quite good. No pump signal, no nothing like that. Are we overheated? No, not overheated, but we are quite hot, but not overheated. So still a bit further to run on the short term there. Daily's going to look pretty good, I'd imagine now. We are toying with the idea of breaking above this Bollinger Band. So finally, we're getting the move on gold that we're all hoping for. And gold and Bitcoin have trended quite well together this year, probably this year more than ever before. So I quite like the way it looks, and this hopefully will get continuation. It does bode well for what we're going to look at right now. Bitcoin. Let's have a look at that. Right, so Bitcoin back up to the 26,500. So we were talking about this potential bounce taking place around here. We did a live stream on Tuesday where I was saying, look, if there's opportunities, it kind of exists now, maybe a little further down, but it kind of exists now for probably more upside than downside. So feel free to start scaling in. And yeah, I mean, basically that was at least the first opportunity to scale in, and so far instantly rewarded. We like it when that happens. It doesn't happen all that often, but it has happened this time. Instantly rewarded. It wasn't enough for me to place futures trades, but it definitely was good enough to commit some capital to spot. So that's doing okay, but it's not. Let's just say out loud, it's not super bullish as yet. We're still below all major moving averages at the moment, so that's fine. That's fine. That's only a daily. Remember, we've been coming down for quite a while now. We did break down quite significantly. So let's have a look at the 4-hourly. Above most moving averages on the shorter term time frames, rejection on the 50. So that's just a portion of a death cross retest, really. So to see a rejection from there, I suppose should be expected. Support on the 21. So we're forming an ascending triangle. If you think about it in the terms of moving averages, they're moving up like this. We've got a horizontal level of support. We've also got a 50 exponential, which kind of makes a symmetrical triangle. So it's kind of just above a 50-50 likelihood of it breaking out from this resistance. The symmetrical triangle is roughly 50-50, which involves the 50 exponential and yeah, I'd say it looks relatively good. It looks really good because an ascending triangle is more likely to break out than break down because supports are basically rising, in this case, with every 4 hours. So not too bad. Does look okay. I kind of like it. So let's take it to a 12-hourly, an intermediate time frame, catching support so far in a 10 exponential. Obviously, we've got death crosses all the way up here, which is the 28,500. That's like a major area. This is where I got the 9% bounce target that I was talking about. You know, so wherever we must have measured that on the day, we're talking a move up to around that breakdown area, that 28,500. So that is obviously going to be a lower high, but it doesn't stop it from being, you know, roughly a 9 or a 10% move, which again is what it measures at, and that's just from the candle bodies, not from the wicks. So yeah, I mean the same analysis still does apply. I am looking for further upside more than further downside, but it would most likely end in just nothing other than a lower high. And we can be optimistic about how we react and respond to these levels, but just as we break bullish and look for golden cross retests for supports to buy dips on for what is usually a V-shaped recovery, we would obviously do exactly the opposite when you have death crosses. So we've got death crosses here on the 12-hourly, all hanging around at that breakdown area, 28,500. You know, it's not just it's not a non-event to see that. We've got the 50 exponential on the daily hitting there at that level. On the weekly, what do we have on the weekly at that level? At the weekly, we've got the 20 weekly sitting around that level. So don't underestimate the power of that 28,500. It's like a major zone. And look, if we break it, absolutely awesome. We can consider this entire thing as nothing more than a bear trap. Traditional markets do look quite good, so that should help the move on Bitcoin. Doesn't necessarily mean it'll direct the move on Bitcoin, but it shouldn't work against the Bitcoin move. So Bitcoin has got I suppose it's found itself in a relatively optimistic portion of all markets where they are looking to trend up in the short term, but whether it can break above that 28,500 is a different story altogether. So anyone who's took positions in here should be cautious around that level and expect a rejection. If you're happy to hold, or you're a hodler in general and just interested in price action, let's focus on that level, because if you do break it, then yeah, you win. We're all loving it. Everyone's moving back up, probably even back up to the top of the range, back up to 31,000 or so, maybe even more. But for the moment, from a trader's perspective, on the technicals, 28,500 is a super resistance, and we should just be not afraid, but cautious. And to be fair, like if you are a trader and you catch that area at the time, that could even be a decent short potentially with a tight stop loss, because there's a lot of resistance at that area on multiple time frames. So it doesn't matter which way you cut it. 28,004 to 28,500 could be a potential short for the next. Well, I suppose we'll say it out loud, the next lower low, which could easily happen. And at the moment, that's the way that the chart is formed, downtrending until we break that level. And so that means a new low would likely form at some point later on down the line, and that could be the top where it could have been, where you could short it into the next lower low. Anyway, I'm going to leave it with you there. There's nothing much more to say about it. If you want to join the Patreon, there's links in the description below. Telegram also. And other than that, hope you have a nice day. Take it easy.